Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look at the gold market as usual on second video today. So you can see our suggestion and long-term expectation on the upper direction finally has happened. So it's been realized by the market, although market hasn't reached yet the predefined target that we have discussed in the weekly report and last week as well. But market has put the foundation of this action as the first step up is done. So on the daily chart we have few important moments. First of all, the grabber that we've got last week, and that was, well, one of the reasons why we said the market should show upward continuation. Now it's completed because the target of this pattern stands right here. It's minimal target, so market have to taken out of this top, and this has happened. Second, if you remember, initially we also talked about this ABC top pattern. And we said, yes, right here we've got the ABCD retracement to the OP, but we also have the XOP here. Right now, this pattern has been erased because market has moved above the C point and it is not valid anymore. So currently we do not have any downside patterns. On a daily chart, you could see currently some kind of the, sideways consolidation is forming that reminds the shape of the flag pattern. At the same time, here market is not at some fib level, it is not at overbought, so here actually market has the free space, and it seems that market is preparing for it taking out of this top because it stands tight below the top. You could imagine what the stops have been placed here above this area. Once it will be reached, it will bring more fuel to the upward direction, and I will not be surprised if my market just will jump right to the 18 even area, something of that sort. Well, the sentiment analysis that we have made in the weekly report suggests that probably should happen because traders significantly have increased the long positions on the gold market. On the intraday charts, as we have taken the positions already 2 weeks ago, because our entry point, we just talked about the entry around 17 even area, 1705 right here, because we have recognized this head and shoulders and said that we should take the position somewhere around this level. Later, last week, we have taken position also on this point, and even on the videos on the last week we said, guys, we already have done everything. So we already have positions or preparations are done, we just need to wait the result, reaction, what will happen. Either we will get the loss, if market will drop below these areas and start erasing of this head and shoulders, or we will stand in profit if market indeed will continue action with our pattern. And right now you can see it stands on the way. So indeed, yesterday and Monday we've got the breakout. Here market has broken through the neckline. Now it stands at the minor target, it's 127 extension. So here we could recognize not only the ABCD pattern, but also it could take the shape of the butterfly. And here's 127 extension 1755, and stands in minor reaction. Next target will stand around 1770, 1776. It's OP and 1618. But I suggest, guys, that market could just shows the slippage above it due to the stop orders above the previous stop. So because when you have the breakout of the previous top, you can't definitely say where a market will finish the upward action because, well, it could just pass through the targets as it now exists, showing the outstanding and unstoppable rally to the upside, because we do not know what stops stands above this area. But anyway, I think that 1780 area could be reached easily. And take a look, what's also interesting here is that take a look at how market responds on this target. It doesn't show drop below the neckline. This is very good sign. So the dropping below the neckline, it could be not good because market hasn't reached the major target of the head and shoulders, but it's already dropped below the neckline, right back down. This always should be treated as the sign of weakness, but here we do not have it. We see that market hits the minor target, and just coiling around it without showing the retesting of the broken neckline, but stands above it. This is good sign. Keep an eye on a possible grabber here. Within a few hours, if grabber will be formed, it will mean that market's ready to continue upward action. In general, this action takes the shape of the pennant on the hourly chart, and that's potentially bullish pattern because it stands after upward action. So, as we have stops right now somewhere in this area, now as market will jump up based on the grabber or by some other reason, move stops below the pennant. So just our task here is to manage the stops because we already have the position, we already have riskless trade, risk-free trade because our stops at the break-even. Now we need to keep going with this and following the market. Once it will start rally to the next targets, move stops below this area. So that's our task for now, and let's see what will happen when the market will challenge the previous stop. It's particularly interesting how much stops are above this area and how far market will be able to climb when the stops will be grabbed.